Hello, and welcome back to another episode of Walk in Christ podcast show where we inspire the masses to become financially free while building God's kingdom. On a podcast today, we have Mr. Jason Stubblefield. Mr. Jason is a veteran and successful multifamily real estate investor and coach. And in this podcast, we'll discuss Mr. Jason's journey as a real estate investor. So thank you for being here, Mr. Jason.
Dami, thanks for having me, man. Glad to be here to chat with you.
Not a problem. How are you doing today?
I'm great, man. I'm doing well.
That's good. So my first question to start this conversation is, who is Mr. Jason?
Yeah, so I was born in a small town in Tennessee. I really came up in a lower income family. From that, I really got motivated. Like I was so fortunate to be brought up the way I was because I had a family that loved me, but was able to understand that you can have all the love in the world, but you're gonna need some money, you know what I mean, in this world. So um it embedded within me like work ethic though, because you didn't have to encourage me to work. I was ready to work. I I really disliked being a kid and not able to take care of myself because I saw the struggle with my family and what they were going through. And I just wanted to do for me and not have to depend on anybody else. So I said that because it led me to basically, once I got of age, right, I got a job. I've been working since I was 15 years old. Um, did odds and ends at like 14, but anyways, 15 is when it sort of got official. And then I went to the military, got out of that, went to school, became a software developer. Was doing government contracting in the Washington D.C. area, and then that's when I really started seeing that, hey, I'm gonna need something to prepare for the future. So I started looking into real estate, did some single family, then migrated over into multifamily, and here I am. So my company, I've been a general partner in over 1,000 multifamily units. We sold off some stuff, but I'm full time into the business now, and excited to just chat with you more about it, man.
Wow, that's great. And congrats on the 1,000 apartment units that you currently have. I want to ask, you mentioned that, after you came out the army, you did,
Marine Corps, man. I got
Marine Corps. I apologize. Once
you
you got out
good,
the,
man. I just for my Marines it might be listed. You know what I mean? I couldn't mess with it.
so
Yeah.
once you
Nothing against
got
the army.
no problem. So once you got out the Marines and you started working, what led you to get started in real estate? What drew you into real estate specifically?
Yeah, I Very Rich Dad Poor Dad. That really got my wheels turning in my mind. Like, okay, I'm doing this all wrong. And then I was like, hey, let me just go out and buy some real estate. So I bought single family to begin with, but really didn't have a strategy. So it was years of just trying to make the single family world work that I just became cognizant of, hey, this isn't working. I need to try something else. And that's what led to apartment investing.
Sounds good. And what do you mean it wasn't working for you? Like you wasn't growing as much as you want, or
Yeah, it was a very slow grind. So I didn't have enough money to be able to just buy as many homes as I wanted. Also, the delays in closing, right? Buying one roof at a time. So I sat down one day and did the math. I was like, well, how many single family homes do I need in order to be financially free? When I saw that number, it became apparent that that was going to take me a long period of time. And I was well undercapitalized to be able to go buy that many. So how much money can I save myself to go buy another single family home? Maybe I could do one a year. And if I need 20 of them, now I'm seeing like, okay, I need 20 years in order to be able to hit, financial freedom or financial independence. And I didn't want to do that. I didn't want to take that long. So that's why I started looking at things outside of just single family investing.
that's really great. And why do you currently invest, or why did you transition into investing into multifamily apartments?
Yeah, that was the only thing that I found that made sense. I tried a bunch of other things that just didn't necessarily work out for me, right? I tried to be a residential agent and sell real estate. I tried to create an app. I was going to be an app guy with a technology background, and that was a failure, right? You know what I mean? I even sold Amway, and that was super
Wow.
cheesy. But anyways, I did all those things, like trying to find a way to make some money. When I got to apartments, though, it was still real estate, which was something that I already loved. But in addition to that, it just worked. Like I was able to see how, hey, you could buy 2 or 3 deals and really get financially independent. And so I went with it.
That's good. And can you walk us through what was your first experience like, your first deal, getting a multifamily apartment? What was that like for you, that feeling like this is something I really want to do?
Yeah, yeah. So first when I actually made the decision, I got so excited about it. I was telling everybody, I was talking my wife head off about it and telling all my boys, you know what I mean? And they're like, okay, JC, hey, sure, right. But it's just how it goes, right? There's times where there's nothing really happening. And so that's how it appeared probably to the outside world, with nothing was happening. But I was different because I had made up my mind on what I was going to do, and I actually saw that it could work. So my first deal really came off of the frustrations with losing out on the deal. So I had a couple of fourplexes. So I was going to buy 8 units in Memphis, Tennessee, and it didn't work out. One reason or another, right? It was a bad deal. It fell apart, and so after that, I was looking for what to do, and I saw this beat up property. It was 50% vacant, but I just thought I had enough money to be able to buy it. And I called the broker who had it listed, told me about it. I went through the numbers and I got excited. So this was a 34 unit apartment complex that needed a lot of work. I purchased that. I made a lot of mistakes, learned a lot. But after that first deal, I, I I started to understand and learn more what I didn't know. But those lessons helped propel me into doing more deals, obviously, and really just sharpening my pencil, ironing out some of the wrinkles that I had in my investment methods, right? So, yeah, that's really what I did, how I got started, and that first deal is what led to everything else.
No, that's well said. And can you talk about some of the lessons you learned from that first deal? Could you say help sharpen your eyes and give you a different perspective on real estate?
Yeah, man, I'll fire out some of them, right? So when I first got started, I did not know that you need to verify income in commercial real estate. So they handed me a rent roll, and I said, all right, you have these people and they're paying money. And in my just being naive, I trusted that. I was like, all right, here's the money. And then I bought the property and was like, where's the money at? Wasn't showing up. So lesson I learned is to ask and request for bank statements from your sellers, right? Bank statements show that they actually are collecting the money. Security was another thing. I had a very loose contract. I showed up with these security deposits. Who knows what it is? Maybe it's $10,000, and I'm thinking the seller's going to get me. We get about a week or so outside of closing, and they're like, "Oh yeah, well this tenant moved out. I used that security deposit to renovate their unit or to fix it up." That number was just reducing. I had nothing in the contract to really hold them to that, so I ended up just on the chin, like, all right, well, I still want to buy it. Things like that, right? Not to mention my business plan was shaky. I had no, I didn't prepare for tenants to move out. It was 50% vacant. My business plan was like, all right, I'm gonna keep these 50 keep the 50% that's there, and I'm going to build on the 50% that's vacant. What I did not account for was the 50% that was occupied, them leaving. So I
Hmm.
quickly ran out of money. So because I didn't have enough money to renovate more units, I stayed at 50% vacant or 50% occupancy while renovating units. And that depleted my capital for the time. So those are probably like three of the biggest things when it comes to verifying income, verifying security deposits, and preparing for turnover. Those are just a few that come right off. And I could keep going, man. That one taught me a lot.
That's well said. And I want to ask, based on those three lessons that you learned, how do you go about structuring your deal, structuring your contract to avoid making those mistakes?
Yeah, yeah. So now we structure everything in due diligence, so that we're asking for bank statements right up front. In our contracts that we use now, we definitely have a clause about what the security deposit is and how that's going to be transferred. So we take out some of the ambiguity around that. Um, in addition to just preparing for turnovers, we expect it now. You know what I mean? So we're going into a business plan, especially if there's something that's a deep value add or a play. We try to make sure that we're prepared for that. In this property, I tried to do some of the renovations out of cash flow. That's a terrible idea, right? Because you don't know what to prepare for. So we never look to do renovations out of cash flow. We want to have all that money to do the renovations up front. When I
Mhm.
financed the property, I didn't even know that the bank would be able to give you the money to do the repairs in commercial real estate. So um, I had to come up with the money to renovate the units myself. Whereas if I was to do that deal today, I would go to a lender, tell them my plan, get them funds all up front, and then we could perform on the property a lot sooner. So yeah, things change, but I learned a lot from that first one, and then that showed me that, hey, just because you're buying a deal and on paper it looks like it's going to work out doesn't necessarily mean that it is all the time.
No, that's really well said. And I want to add, because now you're a general contract partner for over 1,000 units. How did you go about forming that partnership to where you can leverage other people and leverage different lenders to now get different type of assets, class properties?
Yeah, it was really so the first one I did it all myself. The second time, my second purchase was the first time I got into syndication. So when I started, I was like, I'm going to just buy everything. I'll refinance as I go, get my money out, go do another one. Um, and so apologies for that. So what ended up happening though is I wasn't able to excuse me. So I wasn't able to keep on going on that model. I wasn't able to do it all by myself. So what I ended up doing is reaching out to other people to raise money. And then my second deal, I raised money from other individuals. When I did that, though, I still was a one man shop. So I raised all the money, found the deal, did the due diligence. And it was honestly one of the most stressful times in my life because I had so much going on. I still own the original apartment complex. I'm trying to raise money for this second complex, and I was just running out of bandwidth altogether. So that's what showed me that uh, it's you really need a team in commercial real estate. And so once I found some help on that initial syndication, it was like the doors opened up. You know what I mean? I was able to take a step back. I didn't have to do everything myself. From then on, it led me just to develop more partnerships, and that's how I was able to do bigger deals in multiple states.
Wow, wow, that's pretty good. And I want to add, because you mentioned that you read Rich Dad Poor Dad, and just going back to some of the mistakes that you made in your first deal, when you go switching from single family to apartment. Was there any other resources that you were, going to learn more about commercial real estate, or this was something that you was learning as you was going?
Yeah, yes. I had some books that I had read when it came to commercial real estate and apartment investing. So I read books. I did take some coaching programs, very light. You know what I mean? When I comes to so I learned I knew what to do. I didn't necessarily know how to do it. And a lot of trainings that you can find out there, books that you can read, they will tell you the what. But once you get into the weeds of it, it's hard to figure out the how. It wasn't until I started raising money. So in my situation, I was the only investor in that first deal. So I knew I made mistakes. The second deal, when I realized I was going to raise money from other people, I definitely did not want to risk making those mistakes with other people's money. So I immediately went like, who's going to coach me? Who's going to be with me to look over my shoulder throughout this whole process so I don't make the same mistakes the second go around?
That's good. And I guess when I want to ask, how important is mentorship, especially when you're getting started in commercial real estate?
The only reason I'm in the position that I am right now is because I had people mentor me, right? And now I think in the beginning it's easy to situation to to put forth that amount of money, right? It hurts a little bit to dig in. Like I'm trying to make money, and now you want me to take money that I've saved or accumulated and go give it to somebody else. But the the payoff of that is what you learn and the way that you can now go out and do more than you could have done in your own eyes, right? And so now whenever I want to do something, I'm looking for a mentor. It is literally like it's the life hack during this era, right? I feel like you could find somebody who can do almost anything, right? If I wanted to go be a stock expert, or for instance, like I own a couple of semi trucks, right? And I would have never done that. Nobody in my family is operated semis. I don't know, but because of mentorships or people who are willing to teach, right, it allows you to close the gap. So yeah, I would just say if you're serious about it, then it's worth it. And I view it always as an investment. If I pay whatever the amount is, right, it's an investment into me, and I feel like I'm worth it, because if I invest 10,000 into something, I'm trying to get 100,000 out, right? That's my mindset. So uh, yeah, that's really what I do and how I feel about mentorship.
Now that's well said. And I want to kind of round back to what you mentioned when you first got into commercial real estate. You know, when you tell people like, "This is what I want to do," and how they didn't necessarily believe in you because they weren't actually seeing what's going on. And I want to ask, how did your faith, in God, or just believing that this can happen, like how did you continue to have faith that this can happen despite what your current situation was?
Yeah, I feel like my faith has grown so much from being entrepreneurship journey, right? Because when you have things that are easy for you, when it comes easy, it really doesn't force you to step outside of your comfort level to go find that next thing that you're chasing. With doing that, especially being uh, a person who has faith in God, right? It's like you start leaning more on your spirituality. Be like, all right, how does this work? Why are my prayers not happening the way I want to? Right? Makes you ask some different questions. But what I found, it is actually it made me stronger, right? Because you see how things work out. And at the end of it, as I look back and reflect on it, I was like, I needed all those things to happen. It's definitely like I see how all these things work together for my good, even though at the time it felt crappy. But going through it, I'm like, okay, I gained this. I picked up some more confidence in myself. I made a different connection, right? It forced me to go down a path that I wouldn't have chose. But now that I've gone down it, I now see the benefits of it.
No, that's really good, and definitely, like you said, everything works out for our own good, no matter where we are in our journey of entrepreneurship. And I want to ask, as you currently are in your journey, and a lot of people in this current real estate market, a lot of people are renting. There's not much properties being out there for sale. What is your perspective on the current real estate market, and where do you see it going from your experience?
I think this is a great time to buy real estate. Um, I think it's a unique opportunity from what we've seen. We haven't seen a place like this in the last 40 years, right? It's been 40 years in United States history since we've seen inflation this high. And I feel like central banks are going to have to make adjustments, and they are, which is increasing interest rates in order to bring down inflation. But studying history, usually when they do that, it's followed by the lowering of interest rates. So if what I love about apartment investing is it's all based off the income. So what's happening right now is that prices are going to be reduced because the income that the investor will make is going to be lessened because of the rise in interest rates. But if you can buy for cash flow right now, if you can get properties and make the numbers work right now, years down the line, maybe 2 years, 3 years, whatever it is, when the Fed starts decreasing interest rates, you're going to see your valuations go through the roof. And real estate is something that has proven historically over time to work if you can just hold on long enough. And so buying for cash flow allows you to wait out the storm and really go ahead and benefit. So everyone who was trying to buy years ago when things were, well, not even years ago, months ago at this point, when things were really high and multiple offers, a lot of those people who weren't savvy enough are now starting to get out of the market. They're like, it's it doesn't work for me anymore. But it's experienced investors are now saying, okay, this is the time. Here's the moment in history where you can go out and make moves that will pay for them for your experience and better your family for years to come if you would just understand the market dynamics and take action right now.
And I want to add, 'cause you mentioned cash flow. Like, how important is cash flow, especially when you invest in an apartment? Why is that such a big thing? Making sure the apartment can give you cash flow.
Yeah, it's the lifeline of your business, right? So if you don't have cash flow, and that's what has happened in previous years, people are not buying for cash flow. They're just buying because, hey, if I buy example, if I buy something for 200,000 now, in 6 months or a year, it may be worth 300,000. But those days are now gone, right? You may buy something for 200,000 and get it appraised at 175 or whatever it is due to interest rates. So cash flow allows you to ignore the price, right? If I have a property and it's making me, whatever, 10,000 a month or something off of this apartment complex, I don't care what the numbers do. I don't care if it's appreciated by 20% or if it's depreciated by 10%. I still have cash flow. And as long as I can take that cash flow and just wait it out, when the numbers come back, right, I'll be able to sell it in profit.
Nah, that's well said. That's wonderful. Thank you for the explanation. And I want to ask, because since you've been, a partner of so many deals, how do you go about, structuring this partnership where you are still profitable and also the partners you're working with want to continue to work with you?
Yeah, I think that's a great question, right? So when you're forming partnerships, you want to make it advantageous for everybody involved. And one of the key principles of life is just understand um the the law of abundance, right? Everyone is looking to grow. You put a seed in the ground, first thing it wants to do is grow, spread, right? It wants to become more than what it is right now. Same thing for people. And so when I look to go establish partnerships with people, I'm looking to tap into that principle and to form relationships with people where they can see themselves growing with me and my company. And so if you do that, you don't necessarily have any worry about attracting the right people, forming the right partnerships, and you never want to say that you're taking advantage of anybody. So I always want to do it in a way that the people I work with feel well compensated, and I'm well compensated. So I think in multifamily, especially, there's enough pie to go around for everybody.
That's well said. That's well said. And now I want to kind of, change the conversation a bit. I see that you're wearing a shirt about affordable housing, and I know that's something you're currently focused on. What are some of the pros of investing in affordable housing apartments?
Yeah, that's a loaded question, man. But I'll try to hit some highlights. So the pros to investing in affordable housing, one is that you have, depending on how it's structured, you can have guaranteed rent, right? So you could have Section 8. Most people think Section 8, but what I'm doing is not necessarily a Section 8 program. We also do tax credits, and maybe we get into that, maybe we don't. But when it comes to the benefits of affordable housing, just knowing that you have partnerships with governments, like people who are on Section 8 who are getting some of that money from the government, that money isn't necessarily going away in apartment complexes too, because we're offering affordable housing, which means that our prices are pretty much 30% of the income of our tenants. So because of that, we've seen the market that has really surpassed that ratio, right? So people are paying, if you go out and find just a regular apartment, they may be asked to pay 40% of their income or 50% of their income in order to qualify. What we do is leave it at 30% or less. And because of that, we have higher demand. So, second benefit would just be higher demand of tenant base that want to invest there. A third thing I would say is because we're doing affordable housing. Affordable housing is a crisis in the nation right now, and we have we have multiple partnerships, whether it be lenders, whether it be nonprofits, whether it be just government institutions, government agencies that are trying to help with affordable housing. So what happens with us is like we're able to have a more attractive capital stack. So we may have 80% loan from a bank. We may have 10% leverage from um, um, call it a government agency, right? Maybe we have a nonprofit that kicks in some. So we have multiple layers to our deals that make the top line investor or the just regular investor, their returns are more attractive for that reason. And then lastly, I would just say outside of all the economics, I feel good about doing it because as I mentioned in the beginning, right, I come from lower income area, lower income family. So understanding that, hey, when I grew up, like we went to the projects, we didn't necessarily know it was. It's just like where you were. But now to bring it full circle, to be able to be an owner and be able to provide that necessary housing for people makes me feel good about what I'm doing. And I have to say it now because it's on my mind, right? A lot of people, when they think about affordable housing, they think about the projects, right? The rundown apartment buildings, the ghetto, whatever you want to call it. But it's really not what we're doing. We actually call it sort of like luxury affordable housing. So you can have brand new A-class construction, pristine condition with all the amenities and upgrades that you would see on a market rate property. We've just done it and still able to do it with the 30% or under income devoted to that apartment, right? So we can still stick to that ratio while providing affordable housing.
No, that's pretty impressive. And it's funny that you mentioned affordable housing in terms of how they have a negative stigma in regards to when people think about it, they think of projects, rundown apartments. I want to ask, is there any cons to it, besides, of course, economists, steady income, steady paycheck, long-term tenants, but is there any actual con to it, having affordable house, especially the luxury ones that you guys create?
Yeah, yeah, definitely. So there's a lot more red tape. There's a lot more compliance, right? Because you're getting government dollars, governments require you to have compliance. So, for instance, in our properties, you can't make $220,000 and live in affordable housing. You know what I mean? You need to have uh, those are the people that go out and find a place to live. So uh with where we're buying or how we're buying, there's a compliance issue for the tenants. You're dealing with lower income um tenants, so oftentimes um you may have more things to do as far as like providing information to tenants. So we try to help tenants structure how do they pay bills. Unfortunately, there's not enough financial literacy taught. So people don't know that, hey, you might want to pay your shelter before you pay your car note, right? Just doing things like that. So that's when it comes to the tenant base. The biggest headache I would probably say is working with the government and government agencies just because they move slow. It's a lot of paperwork to be filled out. It's a lot of redundancy and lack of efficiencies. I hate wasting time, but it's one of the things that you just have to deal with. So it can be challenging for those reasons, but I also think that's a great payoff if you can suffer through the hardships.
No, that's well said. And would you say the recession-proof business? It sounds like it's a recession-proof business since you work with the government.
Compared to anything else I've seen, I would say yes, right? And it's not always just the government, right? So the government sort of helps us finance it, but it's not like our tenants completely get their rent covered from the government. These like we cater to tenants that are just working, right? They just maybe they don't make a lot of money. So think about your waitress hostess, right? Or policeman or teacher, right? These who work jobs, they can't necessarily afford to pay whatever 2,500 in rent. So we try to cater to that type of tenant base. But because of that, because they basically the same people that you deemed essential during the height of COVID is our tenant class, right? So people who are still working, but they're not necessarily paid at the higher end of the income ladder, but they still are good people. They still need to have a place to live, and we try to provide that.
That's well said. That's really dope. That's really dope that you guys are doing that. And that leads me to ask, as you mentioned earlier, right now in the country we're dealing with a house crisis. Hence the reason why you are in affordable housing. Where do you see the future of, affordable housing? You think it's going to be more of a common thing? Um, But what do you see that future like going?
Yeah, I really think from just the way our economy is functioning, it's forcing the middle class out. Right. So the middle class is diminishing. You're seeing people, you're either upper class or you're lower class. And so I think that this affordable housing crisis is part of that. So whereas like my parents or grandparents could just go get a job and really like that could take care of them, right? If you go back and look at just what it costs to live, I want to say maybe 60s or 70s, just around that area, right? But you could literally just go work a job, and the amount of money that it would cost you for a mortgage or a car or whatever, you could live off of that. Now that's gone, right? So now you, because of economics, you can't really have, well, I won't say you can't have, but it's difficult to have financial stability off of just one income, right? So now you have to have two incomes, usually even three incomes to try to
Yeah,
make numbers work. I don't see that going anywhere until there's a radical change, right? So with that, I foresee more affordable housing being needed, more affordable housing being demanded by the population. I think our government's going to have to address the issue. So they're doing it, but it's usually not enough and not fast enough.
that's well said. That is well said. And one thing that I'm learning from you is that you study history a lot. Like you use history a lot as a tool for you to navigate in this real estate investment world. I want to ask, how important is that for anybody who wants to get into real estate to understand the history in order to, continue to have success?
Yeah, I think once you do this, you really have to say, have we been here before? And I really like Ray Dalio and his teachings, right? Because he is a student of history. And most of the times people are saying, well, have we been here before? Or people are freaking out because they don't know what's going on. But if you study history, it's really like this is another one of those, right? So it's another one of those. And I think for a lot of people in real estate world, this is the hottest time to buy, right? This is the market's going crazy. You got to get into real estate right now. But a more sophisticated investor would say, no, this is just a super hot market that's lasted for longer than uh, most hot markets last for. And so when you see the decline of that, now you can look back and say, okay, how does this decline look? And look in the history, you can say it's another one of those. What it does for you, though, is allow you to see how the government acted, see what happened during the economy during those times, and sort of prepare yourself so you could try to predict the future.
That's well said. That was really dope. And I want to ask, now that you have reached financial freedom, now you have reached that financial independence that you were trying to do with the single family, but now you did with apartment complex. What is your day to day like? How is your relationship with family looks like now? Now accomplished your goal.
Yeah, I mean, I'm still. I mean, I probably work just as much, if not more, uh, then. But because I'm doing something that matters to me, because I feel like I have an assignment and now I'm accomplishing my assignment, a lot of times it doesn't feel like work, or because my family is the beneficiary of what I'm doing, what we're building, doesn't it's not taxing on me to spend an extra hour to get something done, right? And so, yeah, I leverage the freedom that I have when it's time to take a vacation, or hey, today isn't working for me, and maybe I want to go take a day off, right? I do that, but at the same time, I still feel like I'm driven with the assignment just to keep pushing forward with it. So, yeah, I'm still hustling.
That's good. And where do you see yourself in the next 5 years with this drive? Like, what's the future like for you?
Yeah, I really want to build something that is sustainable, something that will be impressive to me, right? And so I don't necessarily want to put a number of units under that, or size of a company to that. What I want to do is build the company in the right way, and then scale it right as large as we can.
That's well said. That's well said. And for those who may be listening, we spoke about a lot of different things, apartment complex, affordable housing. What would you say is the best way for someone who's looking from the outside to get started in real estate in today's market?
Yeah, if you're looking to get started and you haven't, I would say figure out what niche of real estate you want to be in, what niche, anything that you want to be in. It really does start with a decision, right? I tell people to decide and have a definitive decision. This is what I'm doing, right? And with doing that, I like that you have a spiritual based podcast, right? So I think that tapping into that is very important. So you're not just doing things necessarily to make money, right? I know it makes sense for you to do that, but if it is if you're doing something that you're completely out of line with and it doesn't make money, now what do you have, right? Now you're going to stop that business, start something completely new. I know because I've done it in my life, right? And you stop and you start, and that just wastes a lot of time. But when you can make that decision to know that this is what I should be doing. Now you have the confidence to pull you through all of that. So I would say first make that decision. After you have that decision, then find somebody else who's doing that, get close to them and learn from them so you can grow faster.
That's really great. And do you have any programs or courses that people can tap into to learn more about real estate and more about your own journey?
Um I I do. I work very selectively because I'm really active as a buyer, right? So I don't want to take all my time with training other people. But if anyone wants to tap in and just sort of learn about apartments or affordable housing, if you go to jasonstubblefield.com, that's a way that you can connect with me, right? Hear about our opportunities if you want to invest. Or there's also a community that I built where I talk about these things, and you can tap into that, and we can go from there.
I want to definitely say thank you again, Mr. Jason Stubblefield. For those who are listening, I hope you guys don't see another podcast, another interviewer who's just here. I hope you guys take this information and go and apply it into your life. If you're looking for a group of Christians who are working towards building financial freedom, look no further and join the Pray and Invest group. And also, if you guys don't know, I have a free study guide that can show you how you can get started in the stock market completely for free on my website, wealthinchristbrand.com. And stay tuned for next week's episode. And thank you again, Mr. Jason Stubblefield.
Thank